Let's get ready for some earnings. We got still tech companies set to report, especially in the cloud world. We're really just getting started. Workday and Intuit we'll be looking at with Rick Duquette and Renita Young. Let's start with Workday on a little positive note because this market is fading hard right now, Renita, but Workday's still hanging on.
Oh, what a difference an hour makes, right?
Seriously.
Not even a full hour, but Workday is expected to show some pretty strong growth when it comes to earnings and revenue. They're expected to be greater than the year before. We're looking at earnings to come in at $1.25, and we're looking at revenue to come in at $1.77 billion, both higher than a year ago. Now, this company recently had a flurry of price target hikes from Bank of America, UBS, Barclays, Oppenheimer, all boosting their price targets on the stock, among other analysts. And Oppenheimer in particular, which did increase its stake in Workday, despite short-term setbacks, it says that it has confidence in Workday's long-term potential. And those setbacks were the negative net margin and negative return on equity of the prior quarter that happened in May. But the stock is still pretty strong. It's up more than 37% year to date, and they're expecting earnings per share of $1.25 on revenue of $1.77 billion.
Okay, a lot of analysts love. I'm not surprised to hear it, given the way the stock looks. Up, and it went red here since we started, but really nice long term, right?
Yeah, definitely a positive one. We're up about 78, 79% or so from those yearly lows. Maybe a bit of dashed hopes today for the bulls because it looked like we were breaking out to the upside from this short-term downward sloping trend line here. We're back within the boundaries of that area. We're still above our moving averages here. We're still within this kind of channel shape here that we established going across those highs. Kind of a messy boundary, though. We had a lot of excursions to the upside, but never really managed to make too much progress beyond it, though. So, you know, momentum, RSI, not really telling us too much here, kind of near the midline, slightly tilted toward the bullish side here. It was looking much better earlier in the day, though, as we were significantly above that trend line there. So support and resistance, old highs near 240. We'd have to break those to continue some kind of uptrend here. Another boundary near our upward sloping channel here, near about maybe 238 or so. To the downside, 21 EMA near 227, 228. And then we've got this confluence right here, our 63 EMA and our trend line around 220.
Okay, so it's hanging on for the ride, but a little fade today. Not ideal. RSI slipping, not ideal a bit, but I mean, hard to really hate the chart regardless. Hopefully for bulls, it can hold on to around that volume node at like mid 220s. So, all right, let's talk taxes here. Intuit, a little bit out of season. Not the worst looking chart ever, I don't think. What are the analysts saying, Renita?
Well, a lot of investors are talking about the concern that they had about the tax business because it was a pretty messy tax season, as well as because of the IRS wanting to explore a direct filing tax system. So, analysts, however, they expect adjusted earnings of $1.38 on revenue of $2.64 billion. The stock is pretty strong still. It's up about 28% year to date. Morgan Stanley predicting that muted sentiment could possibly turn around this quarter, but it's up to the results.
Yeah, right now it's kind of stuck a little bit. Kind of looks like our other chart, Rick, a tiny bit.
Yeah, kind of. And I think one of the big moments for this chart was when we breached this 462 level, this light dashed green line here. That was about where we topped out many times, and we had a bit of a surge up from that point. We're up about 9% from that level, but things have faltered a little bit here. We have broken through this upward sloping trend line to the downside. We still haven't cracked our yearly highs, similar to our last chart, like you said here. We are above our moving averages, though. They're still modestly trending upward. RSI is also slightly above our midline there. So really things are looking more tilted toward the bullish side here, entering this volume node area once again here near like 495 or so. So 512 to the upside represents our old best close. 21 EMA is support near 494. And then we've got our old lows near 478 to watch.
Yeah, it's pretty well defined, this range we got from 480 to 510 basically. Found support, bounced, now we're sort of in the middle of it in a pretty recognizable, cozy little range going into this earnings. Both these stocks look pretty good. I mean, the cloud companies, even though they didn't have as explosive of a move, as the chips did around NVIDIA. The charts look pretty good, and maybe that works in their favor a little bit here because they're actually doing all right on the session as the markets rolled over. Thanks for the preview. Rick Ducat, Renita Young.